Hi, I'm Leobert Despacio from BSTMT HSM1A, your reporter. Represent a six steps that culminate of the creation of financial statements and of the analysis of financial statements. This is this is for the purpose of making decisions whether it to be investment if we are investor or potentially do business of an organization, and if you were supplier or potentially evaluate for accuracy if we were a government agency. But now for the stakeholders, department heads, this type of course utilize financial information and purposes of making decisions about potentially whether to hire a worker. And with that portion or the steps of cycle, there are a number of difficult things that have to happen in analyze source document. Include the source of information. So in short, we are talking about as many organizations produced a number of different financial transactions. For example, sale of what would be expenses purchasing, office supplies, paying salaries, bringing in revenue from a number of debit product, and each of those represent to a source document. First in the accounting cycle is bookkeepers commonly to have go through all of the different transactions, and they have to classify these particular transactions. They are they are taking all of these different sales receipt and purchasing receipt, and also shipping documents, and they organizing them in such a way that we're going to be able to produce financial statements. Recording transaction. It includes all journals. These journals can be actually physical journals, and we potentially seen them before if you're done in any kind of bookkeeping where you're actually physically writing out the transactions, and we're taking any place, and you have journals for different categories of transactions. Those are meant to really record the actual transactions that take place, and this is where they're first entered into these different journals. So this is really one of the steps beyond just categorizing them and figure out which kind of interest they are obviously recording them so that they're written down them, and then of course we can organize them showing financial. This third of process involves transferring the journal entries to what we call a ledger. This is commonly done with computer programming and in software as well. But this ledger here I'm going to describe this briefly. It is a specialized accounting program, and where idea here they accumulate specific categories. So you have the specific categories that are posted, and what they do is they accumulate those process of information. So we can look at the ledger. So we can look at all the ledger for specific types of expenses, for revenues, and so that managers have the idea that you can find the information about what type of accounting in the same place. Journals were really just notating each of the transactions of a ledger. It is very specific to the category that is taking place, and so that it allows managers to obtain all of the information. It's all of in this place one, and then we can see the types of transactions that have happened within a certain area. Now, after taking process of the ledger, the next step of the process, which is a trial balance. It is what we call a summary of financial data, and really summarize what is in ledger, and the idea have is that would allow account and the opportunity to identify the idea to take place, and of course correct them before we make on that step. Financial statements. It is to produce financial statements or to prepare financial statements, and this is rather self-explanatory if you're writing some kind of going back in this process. This is a kind of going through the steps are assuming that you are know that kind of taking a look all of the source document, and it also categorize the effectively that we record it accurately, and the following examples are to be followed.